Well, good morning, folks. How are you? Hope you're doing well. Let's see what kind of a delay we have here this morning. Waiting to hear myself. Morning, folks. All right, there's the old man. So, hope you had a wonderful weekend. Hope you had a wonderful holiday for those that celebrate it. He has risen, absolutely. So, we're going to go through some markets here, and I'll hang out with you till around 10 o'clock. So, we guess it was like a 45-minute window, and it definitely will be underneath the time constraints that the YouTube servers require for translation. So, and I'll be off about. So here we have the daily dollar index, and we're still hanging inside that consolidation I told you we would be in. Um, I'm sticking to the idea that as long as we don't break down on the dollar, that this will be the draw here. So far, we've just consolidated. Last week was a little bit of retracement into a consolidation. The pound and euro dollar had a little bit of a follow thing. Pound actually did better than euro dollar, and we'll take a look at that in a moment. But this inefficiency in here, and let me zoom in so you can see it. What I'm showcasing here is this portion, that volume imbalance, and this volume imbalance. So this is a suspension block. Easy for me to say, huh? You see, we traded down into that here, just a little bit outside the lines. It's fine. Wicks can do that. The market made a slightly higher high, and we're just consolidating here. Now, I will say something. We are obviously, as I mentioned in Twitter Spaces and also in passing inside the commentaries of these videos, I mentioned that we're in a period of time where people that are in positions of authority understand their influence and they're using it to get rich. Or, and I'll just say it like that. Okay. There's a line in the sand that's been drawn for tomorrow. And if certain things aren't seen, certain consequences are promised to be exacted on someone else. So we've seen this before, and then more timelines or changes have been made. And then we can look back and see there was a large influx of positions made ahead of these news events. So just know that that's where we're at right now. And there's a lot of tomfoolery. While I was away, and I was in Florida, by the way, for the folks that were asking, um, we stayed over in 30A on the Gulf side of the Gulf of Mexico. It's not the Gulf of America. I know some of you guys want it to be called that, but that's not really what that is. Let's be real. So the idea of seeing tomfoolery is shenanigans. That is manipulation. It is not pure market delivery. It is controlled demolition. Okay, we're seeing a lot of that this year. So if you're struggling, just know that you're probably falling victim to that kind of stuff. And the market's kind of like waited on bated breath for the next shoe to drop. What's going to happen next? What's the next bit of news that's going to be tweeted out or posted on social media accounts that people are subscribing to? And I'm not talking about mine. So as long as we keep this suspension block in force, okay, in other words, as long as price is above it, nobody's below the low of it, I'm short-term bullish on dollar with the expectation that we would likely trade to the top of this range here and then eventually to the buy side, which is what I showed you there. Okay. For the sake of showing you what that orange box is, on the monthly chart, we have that volume imbalance right there. and that candlestick's low. So this buy side imbalance, sell side inefficiency, that's what I'm highlighting there, okay? So it's going to be it's going to require some work to get through this is what I'm saying. And that's in concert with what I've already stated in previous live streams. If we lose that smaller inefficiency on the daily chart and we take out that low, these lows, and then this low would be the downside. So if I'm wrong, and I can be in this climate, um, what constitutes that as a precursor to saying, okay, well, where's the next move going to be? Because no matter what I tell you, and whatever happens after I say it, the next thing comes out of most people's minds is, hey, so now what's next? So now what's next? Instead of studying what was already been given to you, so that way you learn how to do it yourself, not require me to tell you what should or shouldn't happen. So these are objectives. Should I have an incorrect read on price action right now? Admittedly, I've been away for about a week or so from price action, so I'm back in that same funk where I have to get in sync. So that'll be what I'm going to be doing with you this morning at the 9:30 opening bell. I'm not going to have a whole lot of annotations on my chart. I'm just going to watch the opening range. I'm going to watch the gap and how we perform inside that gap. I'm not going to have a hard line bias of what it should or shouldn't do. I just want to get a feel for what price is doing. And I'll do that for a couple days this week. And then probably Thursday or Friday, I'll actually start calling it live again in the live stream. But for now, just give me a couple days to get acclimated to what we're doing. And also just allow for the skittishness, the apprehension of the markets before Tuesday's, nonsense that they're either going to do or not do. But as long as this suspension block is maintained and we don't trade down below it, I'm maintaining the bullish stance on dollar index. All right, so let's move on over to euro dollar real quick so we can get through this stuff. Only got a couple more minutes before the opening bell. So euro has been struggling inside the range. And what range am I referring to? This wick. Okay. So far, it's been maintaining its hold over price. We had a couple little wicks trade outside of it. We had this on Wednesday of this week, but the bodies are staying inside that. Okay, so really difficult range to be trading in. If you're a euro dollar trader, you're probably getting banged up in here unless you're taking really short-term scalps, which to me is just it doesn't make sense to do that. But I get it. Some people are going to trade different models, and that's fine. But it's just struggling in here with these two inefficiencies inside of that wick. So everything is pretty much germane to what I was stating. Last week we got down a little bit. Let's see what this low is. 430. And the low, it didn't quite kick that low out. So it was just very, very close to getting to that low. And then we pull back up into the range. The bodies are staying in the lower half of this one. Okay, so that's a little encouraging, but now we have to focus on what we do with this one. Okay, if this candlestick can give up the ghost and leave its body in the lower half, then I would expect it to resume working towards these lows. And then that low is what I told you I was looking for euro dollar as my own personal target. Pound dollar. By the way, the other day I did a live stream. It was on Saturday before I went away, and I had 50,000 people watching on the live stream. I'm not sure if you noticed that, but isn't it strange how YouTube's analytics says that it didn't happen? It didn't happen. So I think they're playing around with my numbers, and that's unfortunate. It's because I mentioned Jesus Christ 2 years ago, and ever since then they have been shadow banning me and doing a lot of other weird stuff. But if you were there last time you watched it, it was 50,000 people watching it, and then the numbers never reflected it. And I know I didn't imagine it because another person mentioned it in the comment section, stating that they saw the 50,000 followers, or not followers, but viewers on a Saturday morning, but without annotating anything in X or Twitter announcing that I was going to do it. I just did it impromptu. So I'm almost curious just to create a secondary channel to do the live streaming from, so that way I can get a more accurate depiction of what's really going on, because I absolutely know that they're playing games, because they're They're ungodly. That's the truth. So there you go. And that's saying that right here where they can see it. So I don't need the money. There you go. How about that? The pound dollar. Let's take a look at that through forex.com. All right, so we had it break down. It went to the low end of this here. And now that it's done this bit of business here, we don't want to see it climb to the upper half here. We don't want to see that. This trading outside of it and coming back up, leaving the bodies below the high part of this buy side amount, sell side efficiency, that is constructive. But now, since it's done it again here, you need to kind of like put your foot down and say, all right, pound dollar, if you're bearish, if you're really, really bearish, we got to keep the bodies out of the upper half now and then start wilting and working towards these levels down here. So far, pound dollar's actually done a better job on the downside than euro. Euro's struggling. But this is what I'm maintaining still. What changes it? A close above this high on the daily chart, then I'm probably wrong. Okay. All right, crude oil. Let's quickly get to that. And there you go. All right, so we didn't get the gap opening last Sunday when I was away, but we had the movement here, and then we opened there for the week. So we're watching to see how we mount a run above this high. If it does, as I said, I stated 150 is not the target. 175, 180, up to $200 a barrel. If things really start, if we see what the guy in the office says he wants to do tomorrow, if that type of thing happens, then obviously I think we'll start to see crude oil really start to extrapolate to the upside. MNQ. All right, so we had this consequent correction of this wick. I told you watch this. That was the next target. It went trading down to that and then cleared the sell side below these two lows. It didn't get down to my first half of the year objective, which is clearing these lows, but it did get to that point there. And I mentioned that should we get there, it could see or cause a intraday reversal. Just be mindful of that. And then we had this here last Monday. We started trading here, went through the targets, and then immediately right back up into the range, closing in all of this portion here. So we took a slight little run above this short-term high. I think that the market's going to be skittish until we get to the other side. So here's that minor buy side here. Didn't quite get there in time, did I? That's okay. We're just tape reading today. We'll look at setups on Thursday and Friday live. Give me a couple days to get acclimated to it. So what do we do here? We took the sell side below this low. Okay, so the first thing they took was sell side, then ran it up to relative equal highs here, buy side. And I want to see, does it want to mount and run up into this buy side? And if it does, it should accelerate to challenge these highs here. And then most likely probably pull back into the range. What was that buy side? Hmm. Take a look at regular trading hours. So we have a premium gap opening. That means we got open higher than previous settlement here. And they were closed on Friday because of holiday scheduling. It's actually Good Thursday, not Good Friday. It's a myth. You can't get 3 days and 3 nights if he's crucified, dead, and buried on a Friday and then resurrected Sunday morning before the sun rose. It doesn't work out mathematically. So Thursday was the day he was crucified, by the way. You can thank me for that, no extra charge. And here's that buy side they're reaching for right above these highs here. What I would want to see, should it get there, because it could just stop right here because Phil's watching, But trading above that, getting that buy side liquidity, then I would want to see it want to work its way back down inside the range defined by this buy side here. And the inefficiency there. So this big buy side and balance sell side inefficiency, even if this thing was to go continuously higher, I would like to see it try to work its way down into the upper half of this, but I'd prefer to see it happen after it takes this buy side or this highs here. Okay. It was able to take this high, but left this one there. So we have the levels. I can bring it back over here, square it up so you guys can watch it with me. So this buy side and balance sell side inefficiency there, no volume imbalances to speak of. That midpoint here, or consequent encroachment, I want to see, does it use this then to make a run higher? And this could potentially become a inversion fair value gap, which is basically laying over top of that same level there. Okay, so what I've annotated is this candlestick's low, this candlestick's high, this is consequent encroachment. Take the buy side. There's that buy side we just talked about. Now, if it's going to pull back into the range, I want to see if it can get back down into this. There's minor sell side forming right here. So for people that's chasing, they like that opening range breakout stuff. That's not what I was teaching the last time we were doing live stream, by the way. Had a couple of people question. So basically, opening range breakout, question mark, like I'm repackaging or rebranding something. The first hour's range is not something that, what's his name? Stedelmeyer or something like, I think it's what it is. He didn't create that. Okay. The first hour's range has always been a thing. It's always been a thing, even before he ever mentioned it. And I'm not trying to beat up on anybody. I'm just saying that a lot of you guys just take social media as your reference, and you think that's the encyclopedia of Britannica, and that's the sole sum of the matter. Like it's because someone posted something about, and there it is. These markets have been utilizing things for a long, long, long time before they were in print. What I was showing you was how you can use that first hour's range to do standard deviations, and that's not what Stoudemire was doing. Okay, and that's not opening range breakouts. That's not what we're talking about. So we worked towards, again, let me refresh my focus, and that way you can see what I'm referring to. This low, when did that low form? Pre-session time. Okay, so 7 o'clock in the morning low, that would have been essentially starting right there. Okay, so those lows are relative equal. If it's going to take relative equal lows out, what can it expand down to? Obviously, that low right there. So they took that first, right here at 929. They ran that first and then ran it quickly above relative equal highs. And then the buy side here, and then right to this level here. So now what I'm watching for, I'm trying to get acclimated to what price is doing this morning ahead of some nonsense tomorrow. Take the buy side, then pull back into the range. This level right here and this gap down. I want to see this show me what it wants to do once it gets there. It may not get there. I may be wrong. And that's all part of getting back in sync with the marketplace. When I've been away for a while, I'm looking for signatures that give me a read. There you go, right back into it. Okay. But it still hasn't touched the consequent encroachment level. So I'm still incorrect so far. Look at that. Look at that. This guy is so lucky. But you didn't take a trade. Dude, go back to sleep. So here's the sell side below here. We'll see if we want to rip through that. Remember, we have the opening range gap that's going to be a heavy weight on draw. So we have this portion of price action down here. All this for free. Good grief. No affiliate code marketing. No buy my course. None of that stuff here. Isn't that fun? All right. So we have no software program to market to you. It's great. So here's the settlement there. And then there's the opening price. So this is your next consequent encroachment. This is opening range gap consequent encroachment. And once it hits that, then I would be satisfied with the read, and I'll teach you something, okay? So we have this annotated now, and I can go back to electronic trading hours. So that level there is the consequent encroachment of the opening range gap. Okay. So regular trading hours, opening range gap. I guess I should have went and showed you the full gap closure. Let me do that too. I'm sorry. So full gap closure would be here, and opening price at 930 is here. So there's your opening range gap. And we can do this. We can add the octants too. There's your screen capture opportunities. You can see what those levels are. Right. So there's the octants. You can see we traded down into the 37.5 octant level there. We had a little bit of reaction. Now I can go back into electronic trading hours. This is the consequent encroachment level. And usually by 10 a.m., here, 10 a.m., usually by that time, they find their way back to mid gap, okay, or consequent encroachment to that level there. So that's all I'm watching to see if it can do that. Not because I'm holding a position, not because I want to be right or wrong. I'm just trying to see if price the deer outside. Hey, 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 girls, come here. Listen, I just want to see if price is going to be able to reach these levels again. Watching price action. This gap here, I'm watching to see if price can stay below that. It's already done enough by taking the sell side and trading back down into the gap. But the next point of business I'd be watching is, does it want to keep price below on the body basis below this range here? Because if it can, this is a reclaimed bearish SIBI or sell side imbalance, buy side inefficiency. Trading above it, if it comes back down in after, like if say it closes above it on this candlestick or the next, if it can use that as a inversion fair value gap, then it might want to try to challenge this high. But I think it's already done enough animation to the upside, utilizing the gap opening and trying to get back to fair value, which would be previous day's regular trading hour settlement price down here from last Thursday. That would be fair value down here. Do not use this information to take trades while I'm doing this. And if you made money, please don't tell me. And I'm not going to give you a high five. And if you lost money, you deserved it because you did exactly what I told you not to do. Read the disclaimer in the description box at the bottom of this stream. Very important. So this is 930's opening price. We went below it here. We came right back to it now. So bulls, if they really want to send it higher, this would be the minimum expectation here. This is all they would require, and then start sending it higher if they wanted to be bullish. So that's kind of like in my mind, the internal dialogue. I'm watching to see if that can happen. I personally am expecting it to try to still get back down to consequent encroachment. Me personally, I want to see if it can do that. Not because I have a vested interest in it, but I just want to see if it can do it. Because if they can leave this gap opening here, then I'm going to anticipate, further fluffing on the upside ahead of Tuesday's, tomfoolery. This is what I'm saying. Some people are misquoting. It's tomfoolery. Okay, that's shenanigans. That's manipulation. That's spill. Okay, that's the guy saying, "Not today." ICT, not today. So, in retrospect, say this would have been a day where I have not been away for a week, and I wanted to take setups. I wanted to short. I wanted to buy long. I wanted to do things. Okay, if you watch the beginning of the stream, when we first clicked over, not the beginning of the stream, but the beginning of when we got to this NQ chart, I stated that we would look for a run up above these relative equal highs. Once we cleared that, then it would be kind of like forced to go higher. They take that liquidity over here because it's real smooth. See how nice and smooth they are? That they want to disrupt that, and they did that very efficiently there. And I said, should it go there before it went there? I said, and then I want to see it pull back into the range. and the objective would be to try to get down into this gap and then the midpoint of this buy side and bounce side efficiency. That would be the target, or kind of like a partial target, and then 930 opening. And then anything below this low would be the first octant there. And then any portion I would have had left on would have been stopped out moving above this gap here. So that's how I would have used it. And you can clearly see that's how I trade when I do it. But these are levels I called while we were looking at it and how I would have used that information. So for like logging purposes, say for instance, like you're brand new, you can go into your charts, not mine. Don't take screenshots of mine, and then annotate like that using this as turtle soup. It's a false breakout. Okay. And then expect it to pull back down into the range. Here, target one, target two is 930 opening price. Sell side, anything below that will be an ideal level, an octant below that, because this is the opening range gap. Old pool of liquidity, that one here. So we're going to see if they can mount a close above that here. If it does, then we'll challenge this high. I'm not convinced that we're done with the opening range gap down here. So this would be a nice little point of draw to it, and then look to see if it can make an attempt to get below here, get the consequent correction. We still have time until 10 o'clock. I'm of the opinion, if we didn't have that line in the sand drawn out by Trump, Tuesday is going to be this day, that day, and you better open straight up, that type of stuff. If he didn't post that, I believe this gap would have completely closed in today already. But there's just a lot of stuff going on in the marketplace. So I'm trying to get a read on it. I'm trying to get a feel for what it's trying to do, how it's trapping traders, how it's influencing traders. Breakout traders are getting smacked around. Selling short below this low. Well, they got the rug pulled there. Shorting, buying above this high here. Okay, we talked about that drawing back down in here, so that was the setup. But the point is I don't think that we'll see a lot of one-sidedness, like one direction type moves today. So I'm just watching until we get to 10 o'clock to see how they use that first 30 minutes of trading, which is the opening range. These levels here, from this opening price down to that low, this portion and all these levels here, that's the opening range gap. Regular trading hours opening range gap. Hmm. Quick look at MES. That's ugly. That's very ugly. We have CPI and PPI Friday and Monday of next week. For those that haven't looked at your economic calendar yet. And the 30-30, it doesn't look good at all. So they're challenging that high. Let's see where they may want to reach for it. If it's going to go above that, let's see. Eh, Like that. Well, I wasn't there looking at it. There's the gap. Oh, you watched it happen, ICT, and then you annotated it. Okay, if you want to say that, that's fine. That's not when I was doing that. I was over here looking at it. I'm on a laptop, folks. I'm not in my office. So you're probably gonna hear my wife doing things around the kitchen. Why'd you pick that? I'll get to it in a second, okay? Just let me continue watching. Right, so see this little gap right here? See that? If we can trade back down through that on the downside, let me see, does that opening have a gap or imbalance rather? Inefficiency. Volume imbalance rather. Say it right, Michael. See, this is I'm a little off because being away from the markets and age is kicking in. I got that Biden thing going on. 361 half open price, close is 61 half. So there's no volume imbalance there. So the wick is accurate and there's no volume imbalance down there. So if it can mount its move below that on a closing basis without running off, in other words, if it runs above this, then I'm going to be done for today and I'll just teach you something right from there. But I want to see now, because we've taken the buy side here, we traded up into that inversion fair value gap, which I'll tell you in a moment why I picked that. The market, if it trades that below this, then we can pull back into, let's see, this would be first presented, where is it at? There. There's first presented fair value gap right there. This is it. So let's leave this there and then we'll go over to this. Volume imbalance, yes. Down to that, and it looks like it may be a volume imbalance there too. Open 30, 324 half, close. Yep, that's a volume imbalance. So we have to make sure that's included. So there's first presented fair value gap, and we're not trading to half of it here. So this could find some wings here. I'm going to take these levels off because they're starting getting too cluttered up. And when I come back from like a vacation or a getaway, or if I fall ill and I'm away from price action, I'm not able to really digest price and see what it's doing, watching it, trading it, even tape reading it. What I generally do is I don't really try to record any new levels. I'm just watching. I'm just observing what is price doing, why is it not doing certain things, is it doing things I'm looking for. And what it does is it gives me it kind of like puts me on the same page with what it's doing at the moment. And too many of you, when you first learn a technique or a concept, whether it's my stuff or somebody else's stuff, you just want to go out there and force it, cram it right into price action right now. And you don't spend any time getting acclimated to what the current price action is doing at the moment. And admittedly, it's a mess. I mean, there's a little bit of rhyme and reason as to what it's doing. You've seen some of that being explained beforehand, but it still feels a little disjointed this morning. So just be mindful of that. If you're trading today, you're trading ahead of a potential mess, and they could drop something today, day before, because everybody's expecting the release of the facts of certain things being done or not done over in Iran, and that may be a catalyst for what they utilize for a quick blow off move. And you may be blindsided because we're all expecting it to be done on Tuesday. It would be tomfoolery for them to do it today. So that's what we're up against this year. Okay. It's very, very challenging. Not only are you trying to time the market and work with market structure and using technicals that have a real basis for price delivery historically, but then now you have your own administration manipulating the marketplace. And then it's just it leaves a bad taste in your mouth. And every school of thought is going to get smacked around, mine included. So it's not like, you know, there's a superior way of interpretation of price action that's going to exclude you. There you go. That's a nice push forward. The Every one of us will fall victim to that because it's manipulation. It's designed to screw everybody, everyone. Okay, so just remember, there's an agenda 2030, and the point is you're not going to be able to make money, and they're going to take everything away from you: your property, your cars, your bank account, your 401s. So they took out all the buy side here. So while I'm looking at it, I'll explain why I highlighted this one initially. Let's zoom into it real quick. I'd like to see it pull back into the range now. The range being the low and the high side that it's formed. I want to see it try to pull back. I'm not interested in seeing it go long. I would not chase it long. If I was trading with my accounts today, I would not look at this and chase long. It can go higher all at once, Phil. I don't care. Okay, I'm not interested. So this little business over here, you look at this wick. See that wick? This wick already did the damage of running the buy side there. So let me just map this out piece at a time, and you'll see why I chose that. That buy side was swept there with this wick. What do we do with wicks? We treat them as a gap. That gap would be viewed like this. Consequent encroachments here. So we had to close above that, and we couldn't get the upper levels. Retracement into that, and then sold off. These bodies were above this swing high. Let me take this off now. This swing high here, it went higher than this. This wick, it's factored in with this run. But the bodies here show you the real volume of the move. It's the real point of concern. The wicks are allowed to do damage, but if you look at the bodies, the highest one in this swing high is there on that close. And then this run here, we ran above those bodies and we pierced consequent encroachment, but we couldn't overcome that wick, which is usually the case. Then the market broke down. Prior to that run above, if we view it like this, and this, when I looked at the price action real quick, and I did it on the fly watching it live for the first time in front of you, this swing high in the bodies, we pierced that there. So go backwards in time from this portion here. Where's the first fair value gap? Right there. So that's the one that runs the liquidity out. So this gap, since it's a buy side and sell side efficiency, that's why I highlighted it and shaded it orange, because it could be drawn to as a potential inversion fair value gap. And then today, you see it reach up to it there, and then we pull back down into first presented fair value gap, which is here. So look how ugly it is. I don't like markets like this. This is not clean price action. Even though it's going to levels we can see, you can anticipate certain things happening. I don't like it. I think it's ugly. I think it shouldn't be taken in terms of using real leverage against it with money and equity. And don't even risk your prop firm account on it. It's ugly. And I know some of you are going to go out there and say, I got an opportunity now to say I did something opposite ICT and I did something right. And he said this and that. Okay, do it every day this week. Do that. Okay. But you have to say it beforehand. You can't come back afterwards. So this is kind of like an ugly high. They tore it higher. So we have a high here, higher high here, higher high here, higher high here. Liquidity has been taken. So let's see if it wants to have a pullback into the range. In a normal market environment without any kind of nest that's expected to occur tomorrow, this would obviously really start to careen lower and go for the lower low on the sell side. So everybody now caught trying to chase this higher. So if I was in Phil's seat today, I would come back against everybody that's long. At least cruise through the low of first presented fair value gap. That's what I would try to do that at the minimum. Gold, real quick. I'll take a look at it. I picked up on you. I heard you. I heard you. Pull up gold. Daily chart. You can read my mind. You missed the old man. Don't lie. You know you did. All right. So I can't remember what the last thing I said about gold was. I don't remember. I don't recall, to be honest with you. But we'll say this: as long as we remain below here, um, that's bearish for gold. It could just consolidate, but that was my target for the first half of the year for gold. Um, it hit other targets, and we already went through all that. Let's take a quick look at silver. Same thing. We have volume imbalance there. Let's utilize that. If it can trade above this on a body basis and then stay out of the lower half once it trades above it. I'm not saying it will. I'm just saying if it can do that, then this could resume going higher. If you recall, I mentioned on trader roundups months ago, that we would probably see silver collapse because there isn't any delivery possible. They don't have enough physical silver to meet the demand. So they would do these types of things to crush the cash market, to force the acceptance of those that want to take delivery of silver. Basically, they're screwing you just like they did in 1980, the Hunt brothers. All this was the same thing that happened in 1980, exactly as I told you in the Traders Roundup, exactly before it happened, and here it is. And I told you they would quickly run lower before the settlement on March contract. Boom. Okay. Now we're in no man's lane. I could care less. I wouldn't touch silver. I wouldn't trade it. But I know some of you are asking. So, with that vein, that idea, if it can trade above this and then stay out of the lower half once it goes to above this volume imbalance, if it can do that, then the next order of business is to see if it can climb back above this volume imbalance and treat that as a foothold. If it starts to mount a run after that, it would need to show a real strong run above this high here. If it can do that, then I would see this as a potential run through to a higher high. I don't see that right now. So that's what it would require from me. All these things. It would need to first prove this is bullish and then break through this and treat that as something bullish. Then I would look for something. Yes, that's climbing a lot of range before it can start moving, but that's my interpretation of it. You asked, now you got it. Okay. I'm not saying you should take a trade on that idea, but I'm not convinced that it's bullish where we're at. And I wouldn't go short where it's at either. So it's kind of like no man's land. I wouldn't touch it. Okay. It can do whatever it wants to do, and I wouldn't participate in it. So that's a safe response because I know some of you like to think I'm giving you a nudge and a little, like a hint. I'm telling you, please don't trade this. Okay. So that way, if you get hurt, you done it to yourself. If you made money, you guessed. And I got no credit in that. Okay. Real quick, we'll take one more quick pass through the indices. Here's your daily. On the daily, this volume imbalance, which we used here, if this thing wants to keep going higher, say tomorrow creates some seismic activity in the markets, we could potentially draw back up into this. And then I'm probably going to be wrong if that happens about this being the first 6 months target. And then what they're doing is probably just building it all up, waiting for Trump's good old boy to take over the Fed chair position. And when that happens, I'm not going to be surprised if they fluff it all up and run those highs there. But that's May, okay? Because they're going to have the good old boy in position and all the interest rate things that they want to have done. He'll get it that way. And that's even further market manipulation. So it's going to be a real hard travel this year through the markets. It's going to be hard. You're going to have to grin and bear it. There's going to be a lot of stuff that you're going to see, and you're going to know that this is absolute BS. But it is what it is. You can't change it. You can't do anything about it. I can't make it happen any other different way. You can't either. So either you're going to choose to participate with your money or not. If you're brand new, okay, if you're brand new to trading, I'm going to say this and I'm going to close. If you're brand new to trading, if your experience level is less than a year or maybe even 2, maybe take the first half of the year off. But whatever's left here, don't do anything in the summertime. Because I think we're going to see some crazy stuff in the summertime. I think the United States is going to get all kinds of stuff happening inside the borders, and it's going to create all kinds of stuff. Okay. And you could wait until the last week of August, going in the first week of September, and start looking for opportunities there. I think the price action will be cleaner. So if you're afraid, if you're concerned, if you don't trust your own ability, that's maturity. If you're inexperienced, that's maturity. That's something that's noteworthy. This is nice. I like to see it now go back down into the low, the first one at the fair value gap right there. It's not enough to do that. So everybody's now caught off chasing it higher, 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 higher. So liquidity right below this low there, that would be where I would carry it down to if I was Phil Billy. This is again first presented fair value gap for today. Let's not extend that. And we'll take this one off. Now let's compare these highs here and see what the Dow did. Higher high there, MES, higher high there, and MNQ, higher high. Okay. I still think this is all capturing breakout artists trying to be long. All right, Phil, just for good old time's sakes, just clear that low out here now, close the stream. You can do whatever you want with them then. Where's Phil? Who's Phil? Swing highs and swing lows are not limited just to the wick high and the wick low of it. Okay. So if we're comparing swings, you want to look at the bodies in the rotation that creates a swing high. Whatever the highest body part is, whether it be the open or close of a particular candle, and then you see that price action pierced with another high or swing high formed with bodies that are above that, and then it rejects, find that gap prior to that new higher run in those bodies, and you're going to get an inversion fair value gap that's very, very sensitive to the price action. Now we're in first presented fair value gap, consequent encroachment. So we want to see, can it stay out of the upper half here on the body basis and extend down through, take the sell side, and then reach into this gap right there. And if it can accelerate after it does that, sell side and consequent encroachment of opening range gap or regular trading hours opening range gap. Thank you, Phil. Thank you, buddy. You're still on the Christmas card list. Still on the Christmas card list. Let's see if we can get down to this and see if this can become a reclaimed bearish fair value gap. Anybody can do this. I could do this. Go ahead and do it. Do it. You see these guys all the time. Hey, what's he really doing? He's not really doing anything. Right. I'm not doing anything. Just like you talking. You'll talk about something after it happens. I'm not here telling you what it's going to do. Oh, look at that. See if it accelerates now. Accelerate, take the sell side below that. And consequent encroachment, this red line here. I know it's a little hard to see it, but let's do this. We don't need these other lines. Just adding to the chaff. So this is consequent encroachment of the regular trading hours opening range gap. So they've torn it higher. Told you they were trapping potential buyers. They're trying to buy on a breakout. I'm watching this candle's body. I'm going to see if it stays inside of this gap right here. Very good. Next order of business is 9:30 opening price. That's the opening range gap high. That's the opening range gap low. If it can trade back to 9:30's opening price and then below it, this is all but guaranteed as a run on sell side. And then we'll see if it can manage to muster the strength to get down to consequent encroachment. Any acceleration below that takes us to a full gap closure. That's pretty. When it does that, that gap we talked about right here, it touched the low of it, and we had another lower low than that previous candle. I like to see that, but we're up against this wick, so that's why it's struggling to get through it. So look at it like this: we have this wick here. That's what's being the challenging factor there. Not that swing low, okay? Not that liquidity below that low. It's that wick. It's staring you in your face, but you don't see it because you don't see an inefficiency. You don't see a gap. You don't see an imbalance. But if you trained under me, you know that that's what that is. And what is it doing? The bodies are staying in the upper half. Is that bullish? That would be bullish. The wick went down the lower half, so that's why you're seeing this struggle in here. We want to see it kind of like crush through this when it was dropping down. We want to see it rip through that. That's real bearish order flow. If it starts to do these types of things here, that's problematic. We don't like to be in part of those types of price runs. That doesn't mean you can't find setups that won't yield to you even in these kind of conditions. It just means that what I'm trying to teach you is by trading in low resistance liquidity run conditions, which is this is not that. And I kind of wish I would have said that in the beginning, but if you've been around for a while, you know by what I was saying about Tuesday and what Trump had posted on his social media platform, which I think is absolutely disgusting. No president should be talking like that. I know some of us like to think like, yeah, we want to be a, a Billy Bad rear end type kind of guy in leadership. This guy's unhinged. I'm just going to say, I don't care if it makes you mad or not. I don't care. Like, this is not something a president should be doing, shouldn't be talking like that. And it creates these types of settings. People are nervous about putting risk on because they got that guy out there. He has a little button. He can push it and, you know, cause chaos. And it's entertainment for him. And the faster he gets out of office, the better. I don't vote, so don't talk to me in the emails, and don't send me any comments about Trump. I don't care if you voted for him. I don't care if you love him. I don't care. All right. Well, I've already went over my time. If I'm not careful, I'll get caught up in a rabbit trail and start talking to you longer, and I'll breach that time window that allows for AI conversion from what I say in English to other languages that it affords you all to listen to if you're in your homeland tongue. So that's it for this morning. I'm going to grab something to eat real quick, and if Kit and Company is doing their thing, I'll join you guys there, but it won't be right away. I'll need a couple minutes to get something in my stomach and break my fast, and then I'll touch base with you later on this afternoon as a review. I'll give you an idea or lay of the land what I think might be something that be useful tomorrow for controlled demolition should certain scenarios pan out, like he was saying on his social media account, he being Trump. So that's it for the day. Hopefully, you got something out of this tape read. This is all that's required when you're brand new. It's very forgiving. It's not like I have to be right. It's not about finding a setup. It's about getting in sync with price action. First presented fair value gap, it just traded up to that. So now if it's bearish, it needs to show a strong showing right there. Go for that sell side in the next candle or the next candle after that. So don't count this candle. It's the next candle or the next one. Take out that low, accelerate, and take out the sell side. That's how I'd look for it. Until I talk to you later on, I wish good luck and good trading.